Okay, dear students, this is Abil Ahmed from Abil School of Accountancy. I just wanted to respond one query of my mock. Majority of the students they asked the question. Even though I have explained to my all enrolled student in my mock debrief, but after that I felt that's my responsibility, being the most senior AFM teacher. I should share this. I would say something new with each and every AFM students. So I really need your 5 to 10 minutes and you are going to learn something guaranteed new, even though tomorrow is your exam. So you have to spend 5 to 10 minutes with me, seriously. Let me write a formula, the beta formula. Beta asset is equal to equity beta into market value of equity divided by market value of equity plus market value of debt, 1 minus tax rate. Almost in every past paper, you have seen formula like this, but there's a possibility. You might come across a question in exam where the formula, where companies, they do have beta debt. If there's a beta debt as well, then the formula goes ahead. Then the complete formula is beta debt into market value of debt, 1 minus tax rate, market value of debt, 1 minus tax rate divide plus market value of equity. Now you might be thinking, so what is new in it? Just wait and keep watching. Let's say APLC, market value of equity 200 million, market value of debt 80 million, equity beta 1.75, beta debt 0.4. Okay. APLC is diversifying to the new industry. Okay. Let's say in new industry, proxy company is BPLC. BPLC market value equity is assuming that is 250 million. Okay. And let's say market value of debt 125 million. Equity beta is, let's say, 1.8. Beta debt is, let's say, 0.6. Okay. Other information. Tax rate is 30%. RF is 4%. Equity risk premium is also 4%. Required, calculate risk adjusted WACC for APLC. Okay. Let's say APLC is having KD 6%. Okay, now listen and listen carefully. Since APLC is diversifying, so we know that in case of diversification, we need to calculate a risk-adjusted WACC. So what are the steps? Very simple. Step 1, we need to find out the beta asset of the new industry. By using proxy companies, financial gearing, equity beta, you will be calculating beta asset of the new industry. So let's see. What is the approach of calculating risk-adjusted WACC? Step 1 is to find beta asset of new industry. Find beta asset of new industry. So simply, what are we going to do? We will de-gear equity beta of the proxy company and calculate beta asset. D-gear. Beta equity 1.8 of proxy company, that is BPLC. So beta asset is equal to equity beta into market value equity. Proxy is having 250 million, 250. Market value of debt is 125. Tax rate is 30%, so it's going to be 0.7. They do have a beta debt as well, which is 0.6. Market value of debt 125 into 0.7. 125 into 0.7 plus market value equity, which is 250. So very easily we can calculate beta asset. Till here you might be thinking, sir, what is the new thing? Wait for that, please. Wait and just trust. 251 plus 125 into 0.7. I'm getting 1.333. So let's see. Zero point one triple five. 1,333 plus 1. I'm getting beta asset 1.4885. Till here it is very simple. Obviously, very easily we can solve this in Excel as well. The question is, when we are going to gear up this with the financial gearing of APLC, then how to manage? Let me explain. To gear up beta asset 1.4885 with financial gearing of APLC. Now let me just write a formula for you. The formula is beta asset is equal to beta equity, VE, VD, 1 minus T, beta debt, market value of debt, 1 minus tax rate, market value of debt, 1 minus tax rate, and market value of equity. This time actually we need to convert beta asset into beta equity. So what to do? Just keep watching. I can write like this: beta asset minus beta debt into market value debt 1 minus tax rate, market value debt 1 minus tax rate plus market value equity is equal to equity beta into market value equity plus market value debt 1 minus tax rate. Okay, now I want to say this is my left hand side and this is my right hand side. Okay. Obviously now we can very easily solve, and then I'm going to explain this on Excel as well, and this will 100% this is going to 100% help you. This is approach of left hand side and right hand side, because the main thing is how do we solve this on Excel. After that I'll go to the Excel as well. Right now keep watching here. Left hand side beta asset is 1.4885. See, we don't need all this if we don't have beta debt. Because of the beta debt, it is happening. Beta debt of APLC is 0.4. Okay, APLC market value of debt. APLC market value of debt is 80 million. Tax rate is 30, so it becomes 0.7. 80, 0.7. Market value equity, APLC is having 200 million. Is equal to beta equity. Market value equity is 200, 200. Market value of debt is 80 into 0.7. Let me use the calculator. 80 multiplied by 0.7 plus 200. And then into this. I'm getting 1.4885 minus 0.0875 is equal to. Just a minute, I'm getting 0.78125 into beta equity. So 1.4885 minus 0.0875. Now listen carefully. Left hand side, obviously right hand side. So left hand side divided by right hand side will give us beta equity. Simply left hand side divided by right hand side will give us beta equity. Left hand side is this, divided by right hand side will give us beta equity. So 1.401 divided by 0.78125. 78125. So I'm getting 1.79328. So 1.79328. This is equity beta. Okay. Very easily. By using CAPM, we can calculate K. Risk-free rate is 4%. Equity market risk premium is also 4% into 1.79328. So let's see 1.79328. I'm getting K 11.173%. They have given us KD 6%, so KD 1 minus T is 4.2%. So very easily we can calculate risk adjusted WACC. K is 11.173 into market value equity, which is 200 divided by 280 plus KD 1 minus T 4.2 80 upon 280. So 11.173 multiplied by 200 plus 80 multiplied by 4.2 divided by 280. I'm getting 9.18%. Now the main thing is, student, how to tackle this left hand side and right hand side on Excel. So let's quickly deal with this on Excel. Let me first write the data on Excel. Just a minute. Just a minute. Okay, students, everything is same. I've just written the data that APLC is diversifying to the new industry. I just wanted to, main thing is explain how to deal with this on spreadsheet. Step 1 is very simple, to de-gear beta equity of BPLC. That will give us beta asset. So is equal to, the main thing is how do we calculate beta asset? I think calculating beta asset is very simple. But obviously left hand side, right hand side approach, we'll come to that. Let us first quickly calculate beta asset. Keep watching the steps. Is equal to equity beta multiply then bracket market value equity divided by market value equity plus market value of debt. Tax rate is 30%, so multiply by 0.7. Then just I'm going to take this in the bracket and bracket close plus beta debt multiply by market value of debt into 1 minus tax rate divided by market value of debt into 1 minus tax rate into 1 minus tax rate plus market value equity, bracket close, and then bracket close. So we're getting beta asset 1.48889. Okay, the same thing. Now we have to gear up this beta asset with the gearing of APLC. To gear up beta asset 1.489 with gearing of APLC. Now that is very important. Beta asset. Now we have to go towards left hand and right hand side approach. Beta asset is this minus beta debt. We'll take beta debt of obviously APLC, which is 0.4, multiply by market value of debt. Market value of debt of APLC is 80 million into 1 minus tax rate divided by market value of debt, which is, let's say, 80 into 1 minus tax rate plus market value of equity, which is 200 million. Bracket close and then bracket close. So left hand side is 1.40 this. Okay, now let's go for right hand side. Right hand side, obviously we have beta equity. Beta equity. Now the problem is we need the answer of right hand side and then left hand side divided by right hand side will give us equity beta. Okay. So simply right hand side. Let me simply explain the examiner. Beta equity multiply by, let's say, market value of equity divided by market value of equity plus market value of debt into 1 minus tax rate 0.7. Okay. So market value of equity is 200. Divided by a multiply market value of equity is 200 divided by market value of equity plus market value of debt, which is 80, multiply by 0.7. So now very simply we can, and this is our left hand side. So simply beta equity left hand side divided by right hand side. Left hand side divided by right hand side. So here comes your beta equity. Now very easily by using CAPM we can calculate K. K is equal to RF is 4% plus market risk premium is also 4%. Rest is not an issue at all. So main thing is what I would say. The main thing is how do we calculate gear up? How do we gear up beta asset? So the approach of left hand side and right hand side is the only answer which will give you the appropriate result. So I just wanted to explain one thing to you. If question comes in exam in which you have been given beta det also, what to do? Number one, calculation of beta acid is straightforward. But after calculating beta acid, the main thing comes, how will you gear up beta acid with your own gearing? For that, do not forget the approach of left hand side and right hand side. So that is all from my side. I just wanted to explain this, and I hope this video is really beneficial. You might have found this video very informative and beneficial for you. Best of luck for the exam. So thank you very much for watching this lecture.